Hello friends, welcome to my channel Financial Fitness with CA Ashima Abel Yunus. And to this video, which is part 4 in the series of videos on double taxation avoidance agreements, commonly known as DTAAs. Double taxation is attracted when a non-resident is liable to tax in the country of his residence on the worldwide income as well as in the source country on income accruing or arising in that source country. But double taxation avoidance agreements are in place between countries to avoid levying taxes twice on the same income. To know more about international taxation and how to avail benefits that comes with double taxation avoidance agreements, you can watch part 1, 2, 3, and 5 of the videos in this series on double taxation avoidance agreements. In this video, I will cover various FAQs, which are frequently asked questions on the benefits and use of double taxation avoidance agreements, like how to determine if DTAA is applicable in your case, how to determine which DTAA is applicable, what is bilateral relief and unilateral relief, and on what type of income double taxation avoidance agreement is not taxable. So make sure you watch this video to the end. To understand the basics of international taxation and double taxation avoidance agreements, you can watch my previous videos, which are part 1, 2, and 3 of the series on DTAA. You will find the links to those videos in the description box below, as well as in the I buttons above and towards the end screen of this video. But before we begin, I would request you all to please subscribe to my YouTube channel. It's totally free. You can just log in on YouTube with your email ID and click on subscribe icon and share it with your family and friends. You can also share it in the WhatsApp groups in your phones. I will just take a quick pause for only 5 seconds so you all can take time to click on subscribe icon, like icon, and also click on the bell icon that you will find below the video. Please do that while I wait. Okay, so now I'll quickly introduce myself for the new viewers. Here I am, CA Ashima, a professionally qualified chartered accountant, a certified auditor, and a certified ERP implementation specialist specializing in tax, finance, IT, and audits. I have worked as a partner and a director with one of the top 25 leading CA firms in India, which has also been a member firm of one of the big fours. After working in India for a period of 10 years, I moved to Sweden and have also worked as a senior financial consultant with a multinational in Sweden and cater to clients in Sweden, Finland, Norway, Denmark, and the UK. I've also worked as a freelance financial consultant. Now let's begin with the frequently asked questions on double taxation avoidance agreements. The first one is how to determine if DTAA is applicable. You can follow these simple steps to determine whether double taxation avoidance agreement applies in your case. Step 1 is DTAA applies only when the transaction is taxable both in India and in another country. Also, one party involved in the transaction should be a non-resident or an NRI who became resident or vice versa, or a foreign company. The next question is, which DTAA is applicable? You can follow the steps to determine which double taxation avoidance agreement applies in your case. First, identify your residential status, that is, your residence country, where you stayed for more than 182 days during a financial year. Second is to identify your source country from where you derive your income. Double taxation avoidance agreement between your residence country and the source country will be applicable in your case. Now let's understand what is bilateral relief and what is unilateral relief. Double taxation relief can be provided mainly in two ways. The first one is bilateral relief. Bilateral relief is when the governments of two countries enter into an agreement to provide double taxation relief by mutually working out the basis on which the relief is to be granted. There are two methods of granting relief under bilateral relief. Exemption method is where a particular income is taxed in only source country and exempted in residence country. Another is tax credit method. Income is taxable in both countries in accordance with their respective tax laws. The resident country allows the credit for the tax charged in the country of source. India follows tax credit method for majority of double taxation avoidance agreements. The second is unilateral relief. This method provides relief if no DTAA has been entered with the country. This provides relief unilaterally by a country to its resident for the taxes paid in another country. Now let's understand on what type of income double taxation avoidance agreement is not applicable. As per the provisions of double taxation avoidance agreement, it restricts investments done to save tax from taking benefits of the agreement. So if a company makes an investment in a country and then reinvests it in another country with the intention of saving taxes, such an investment does not fall under the purview of double taxation avoidance agreement. Double taxation avoidance agreement ensures that the honest taxpayers do not end up paying tax in two countries. It also acts as a tool to promote investment from certain countries by offering tax exemptions or lower tax rates. It is an effective way to promote cross-country investments without any ambiguity. So friends, this was part 4 of the series on double taxation avoidance agreements. To know more about other FAQs on DTAA, like how to determine what are the steps to apply for double taxation avoidance agreements, you can watch my next video, which will hopefully come up soon as part 5 of this series on double taxation avoidance agreements. You can also watch my other videos where I have shared information about tax benefits for returning NRIs, like RNOR's tax status and other tax benefits for NRIs on sale of house property in India, and many other videos related to financial planning and investments, which are not only relevant for NRIs, but for all others as well. Now it's time to wrap up this video, and I hope you all will benefit from the information shared in this video. And if you find it useful, then please make sure you click on the like icon. And please do subscribe right now if you haven't done that yet. You just need to log in with your email ID on YouTube to subscribe. That's it. It's totally free for all. So do it right now. Like, subscribe, and share. Share it with your family and friends, and do share it in the WhatsApp groups in your phones as well. Thank you and bye-bye.